to see participants joining us from different parts of Nigeria and across the globe, right? But before we dive in, let's make this very interactive, right? Please go to the chat box, type your name, the city and country you're joining us from. And if possible, please drop your LinkedIn profile link in the chat box so we can connect and grow our professional networks. Now, this, like I said, is our very first session of the year, and what promises to be another amazing year of learning, relearning, unlearning, and creating impact. As we typically say at AHRP, continuous learning is our DNA. And we're excited to kick off this year with a session that is not just timely, but critical for all HR professionals navigating today's economic realities. Our topic for today is pay, inflation, and expectations. What fair compensation means in the 2026 economy. Now, this conversation could not be more timely, right? Well, we're operating in a reality where inflation continues to pressure living costs. The new tax reforms are already affecting take-home pay, and employee expectations are rising. Now, often, and this happens often faster than organizational capacity to respond to these changes. And today we are going to explore how HR can balance economic reality, employee sentiment, and organizational suitability while we still deliver compensation that feels fair. Now, before we go further, let's pause for a minute and remind ourselves of who we are and what makes this community very, very special, right? So we'll quickly go through our vision. Now, AHRP is not just another professional association. We're a movement of HR professionals committed to raising the standard of our practice and the impact we make in organizations and the society at large. Now, our vision is simply to be the go-to source of competent human resource professionals who redefine the practice. Now, that means that when people think excellence in HR, innovation in people management, and professionalism in our field, AHRP should come to mind. Our mission is very simple. It's how we make that vision real. Now, we create value for HR professionals and organizations through coaching, mentoring, and research-based learning and capacity development programs. So every session like this, every mentorship opportunity, every knowledge sharing platform that we have over the course of the week and bi-weekly, it's intentional, right? It's designed to strengthen competence and confidence, as well as credibility in our profession, right? And we don't just say these things, we live them through our core values, which is represented by the acronym CAREER. C stands for credibility. Now, being HR professionals whose character and professionalism speaks before we do. We believe in authenticity, no pretense, no noise, just real knowledge, real growth, real impact. We uphold responsibility, which simply means knowing what is required for us as HR leaders and actually doing it. We embody resilience. Being the HR profession requires us to keep standing, even in difficult and uncertain environments like the one we are discussing today. We are guided by integrity, ethical standards, and non-negotiable. We practice empathy because HR is ultimately about people, their experiences, and their emotions. So empathy is one of the core values that guides us here at AHRP. And of course, finally, we operate with agility, which is the ability to respond quickly and intelligently to changing workplace realities. Now, these values shape how we think, how we lead, and how we serve. We also have what we call our cardinal mandates. First, we exist to bridge the cardinal gap between HR professionals of different cadres, whether you are early career, mid-level, or executive. This is one platform where we learn together. Secondly, we serve as a platform for learning, capacity development, knowledge acquisition, and experience share. That is why sessions like this that we're having today helps to equip us to go back to our organizations and help us make better decisions. So as we proceed, remember, you're not just attending a webinar. This is a professional community that is committed to redefining the practice in HR. Now, just a quick wrap of what lies ahead this year. Like I said, this is our first edition of our bi-weekly learning sessions. But of course, outside the bi-weekly learning sessions, AHRP will be hosting two major flagship events this year. First, we have our KSS coming up in May 2026. And of course, this will be a physical session, which means, of course, you're exposed to deeper networking, richer engagement, and the kind of room where the energy just isn't the same when we're doing virtual, right? And of course, details of this KSS would be revealed very soon. So please stay tuned, keep your eyes and ears on the ground. And then we have the big one coming up in November, the 9th AHRP annual conference. And of course, for those of us that were in attendance last year, you know how it went down. And of course, this promises to be a lot bigger, right? And our theme this year is Beyond Strategy, Activating Human Capital for Sustainable Growth and Performance. This will be holding between November 19th to 21st, 2026. And of course, as usual, the first 2 days, November 19th and 20th, will be virtual learning sessions, bringing global knowledge right to your screen. And then we close in style on November 21st with our gala and awards night, which is expected to be a physical celebration of excellence. And of course, the gala this year will be holding in Victoria Island, Lagos. So tickets are already available. And of course, either you're joining virtually or physically, there is a category for you. And we encourage everybody to register today as the events get bigger and bigger every year. And of course, beyond our events, our knowledge sharing continues. Many of you received our January 2026 edition of the newsletter. And of course, the feedback has been amazing so far. And of course, the February edition is in progress, and this is your platform too. So if you have articles, think pieces, professional adverts, or insights you wish to share, please send them via WhatsApp on 081-7492-4165 or email at corporatecoms@ahrp.org. We also recognize the HR professionals. And of course, for those who wish to join the association, if you're not a member, please do well to scan the QR code on the screen or use the link available on the screen as well. So now, back to today's session. As we explore fair compensation in the 2026 economy, we are privileged to have two distinguished experts with us, Dr. Oluyemi Adeosun and Mr. Oladejo Adeyemi. Before we welcome them, let's quickly listen to their profiles.
Introducing Dr. Oluyemi Adeosun. Dr. Oluyemi Adeosun is a top-performing human resource executive, economist, and researcher with over 22 years of cross-industry experience spanning power, oil and gas, telecommunications, fintech, ICT, real estate, academia, and consulting. He currently serves as chief economist at Business Day Media and sits on the board of 5 organizations. A thought leader in HR, he is the pioneer of HR mentorship with over 7,000 members, runs a YouTube channel with 6,250 plus followers focused on HR knowledge, and has published more than 50 research papers in reputable journals. He is an awardee of the Fate Institute Prestigious Senior Research Fellow 2024 to 2026, a certified career coach, and an award-winning Distinguished Toastmaster DTM. Professionally, he has held senior HR leadership roles including Head of HR at Eterna plc, Ikeja Electric, Courier Plus Limited, and Russell Smith Integrated Oil Services, as well as Group Head at Global Accelerex Holdings and Research Fellow at Lagos Business School. He is a thrice-elected Governing Council member of CIPM, holding certifications such as SPHRI, GPHR, and MCIPM, alongside a PhD and MSc in Economics, University of Lagos, MBA, OAU, and Bachelor's in Economics, Unilorin. A member of multiple global research networks, including AfricaLix, GlobalX, and the Nigerian Economic Society, he continues to shape policy, practice, and thought leadership at the intersection of HR, economics, and organizational transformation. Ladies and gentlemen, join us in welcoming Dr. Oluyemi Adeosun. Introducing Oladejo Adeyemi. Oladejo Adeyemi is a partner in the Commercial Practice Group at Anderson, Nigeria, where he specializes in corporate and personal income tax planning, transaction tax management, and tax dispute resolution. Since joining Anderson in 2017, he has been instrumental in delivering practical, high-impact tax solutions to a diverse client base. He previously built strong foundations at a leading Big Four firm, advising organizations across multiple sectors on tax compliance, strategic planning, and navigating complex regulatory environments. Over his career, he has advised both local and multinational companies, supported major corporate transactions, and developed strong working relationships with tax and regulatory authorities to resolve tax matters efficiently and manage risks effectively. Beyond client service, Oladejo is a respected voice in tax practice, policy, and capacity building. He regularly facilitates tax training programs for industry players, regulators, and legislators, and actively contributes to public discourse on taxation and economic policy, including appearances on national and international television. He holds a BSc and MSc from the University of Agriculture/Federal University of Agriculture, as well as a Master of Legal Studies in Taxation and an MBA from the University of San Francisco. He is a Fellow of the Chartered Institute of Taxation of Nigeria, CITN, and an Associate Member of the Institute of Chartered Accountants of Nigeria, ICAN. Ladies and gentlemen, please make welcome with a warm round of applause, Oladejo Adeyemi.
Right. Thank you. Dr. Oluyemi, it's nice to have you once again. Of course, you're a friend of the house. And Mr. Oladejo, thank you for joining us today. Please.
Thanks for having me.
We'll get straight.
Thank you so much. Good evening, everyone.
Good evening. Thank you so
Mr.
much.
Oladejo Adeyemi. Yes.
Yes, sir. Good evening.
All right. So we'll get straight into it. Of course, Dr. Oluyemi, I would like to start with you. And in today's Nigerian economic climate, right, we're 1 month into the new tax reform, and we've had to deal with persistent inflation and rising employee expectations, right? Now, what does fair compensation realistically mean? Is it about take-home pay, cost of living protection, internal equity, or organizational ability to actually pay?
Thank you so much, our moderator. Thank you for what you do, and very special thanks to AEHRP. Privileged to be a friend of the house. Thank you so much. I'd like to say I like some of the pointers you have already provided, because fair pay is a combination of all of these things plus more in no particular order. Let's say, for example, there's what we call inflation. Inflation speaks to a situation where, try to use as simple terms as possible. You literally have more money chasing fewer goods. In other words, you need a lot of money to buy what you used to buy before. Let me even make it simpler. I'm sure many people on this call will have seen that thing on social media where somebody bought items at the supermarket, I think 3-4 years ago, and bought the same items very recently, and he needed almost 300% or thereabouts of the same amount to buy it. And the fundamental question was that, as my salary increased by that same rate, okay, now, to put things in context, inflation is not affecting just employees. Inflation is also affecting businesses and organizations. And as HR professionals, we need to put this in context, because we wear a dual hat. We're a business partner. We are also employee champions. But it also shows and means that we need to demonstrate a higher level of empathy. Sometimes because we can't afford something, we pretend and live in denial. So even if we are supposed to have revised employee salaries by 200%, but we have only revised it by 50%, we should say, we know you deserve this, but we are able to provide this based on our own economic and financial situation. So when we talk about fairness, 3 key things here. You are looking at external competitiveness. In other words, are we paying the rates for the role in this specific location? So there's the geographic factor. A job in Lagos, a job in Osogbo, Enugu, Port Harcourt, Abuja, Kano, the cost of living in these regions differ. All right. So if you are in Lagos, you want to make sure that you are benchmarking the local market rates in Lagos. There's also what we call internal equity, a situation where employees compare what they earn with what their colleagues earn in the same organization. And then we have the individual value contribution. All right. So what am I adding as a professional, as a staff, as an employee, vis-a-vis my contribution, my potential? So the key thing here, when we talk about fairness, can we defend the salary that we pay our team members? Can we explain the logic behind each number? Let me wrap up by saying here that there's this what we call reasonable man's test. Today, for many organizations, a component of our salary is transport allowance. I put it to us, my distinguished, highly respected colleagues. The transport allowance, if you do a calculation between the person's house and the office, is the transport allowance really sufficient? It now also depends on what you are doing. If you calculate through Uber versus you calculate through yellow taxis or buses, the rates will be different. So the transport allowance must be real. Let me use another parameter. We typically also have housing allowance. If you are in Lagos, the housing allowance you are paying your average staff, can he rent a house in, let me just be modest, can he rent a house in Surulere, in Yaba, in Bagada? I'm not talking Ikoyi, I'm not talking VI, I'm not talking Ikeja GRA. So a good starting point is to look at these allowances that we have tied to specific items, housing, transport, and so on and so forth. And these allowances, the way it is today, can it meet those requirements? Your data allowance, can it really buy data? How many days? Is it up to 1 month or 5 days? And so on and so forth. So let that just be my initial remarks before I see everything to say. Over to you, Prince, our moderator.
Thank you so much, Dr. Oluyemi. Mr. Oladejo, what does fair compensation truly mean? Let's get your opening thoughts on this.
Thank you so much, Prince, and thank you, the entire AEHRP team. indeed a pleasure to be part of your session this evening. I was laughing when Doctor was talking because he pretty much covered the field. And the essential thing right now is for organizations to begin to assess what the pay components, have been over the years. There are some organizations today that are still paying bicycle allowance. If you have followed, if you have followed the tax development over the years, you know that some of those allowances took a leaf from the tax structure that we had, particularly in the time of Peter before the amendment in 2011. But some of those things are indeed no longer relevant, and the amounts that have also been affixed to them. So when you look at fair compensation, you are looking at the company's ability to pay, vis-a-vis what is due to employees. There's no point giving highfalutin numbers when an organization will struggle to pay it. And there's also no point reeling out excess profits that you're going to be paying in taxes, that would be impacting your tax numbers while you are not paying your employees well. Someone asked a question very recently. Do you know why those in the oil and gas space, why they pay so much to their employees? You may want to know what the tax rate has been, over the years. If those expenses are not paid out, they are going to be paid in taxes. Over the period, some of them, depending on the stage of the business, may pay as high as 85% of their profit, in tax. So the point is, it's usually a balancing act between what companies can indeed afford to pay vis-a-vis what the employees truly deserve. And a good way to go about it, especially at a time like this where you have changes in our taxing regime, is to benchmark. What are they doing in other organizations of similar nature? No organization exists in isolation. So what is fair to one may appear unfair to the other. But if the company is booming and things are going well, returns, shareholders are getting returns, the numbers are high, I think it's only fair to look at current economic realities as often as any company or any organization can do so, assess things and see how things can be better for the employees. In my view, that's what I would say what fair compensation entails. Thank you.
Thank you. Thank you so much, sir. All right. Thank you so much for your opening thoughts, our panelists. So let's dissect, right? Let's look at this bit by bit and look at different scenarios and probably situations that employees have found themselves in, right? Dr. Oluyemi will be looking at it from the economics and HR standpoint, and Mr. Adeyemi will be looking at it from the tax and payroll structuring angle, right? So back to you, Dr. Oluyemi. Now, employees often say, my salary hasn't changed, right? But everything else has, right? From an economic standpoint, right? How should HR interpret this gap between nominal salary and real living standards?
Thank you so much. First and foremost, let me say that the average HR professional should improve their economic literacy. Economic literacy. By economic literacy, there are some simple terms like inflation, okay, cost of living, all right, terms like purchasing power parity, all right. Then we should also pay attention to cost drivers. For example, one key cost driver in Nigeria is PMS. PMS means petrol. And typically there's always an announcement. It usually used to be from NNPC in the past and more recently Dangote. So it's either the price is going up or down. Don't pretend you don't know when these prices, for example, go up, especially when they go up significantly. Of course, you should also recognize when they go down. Now, let me quickly say this. because I'm an economist and we use data, but let me contextualize the data. You realize that as at November, December last year, inflation had dropped down to like 14, 15% thereabouts. However, 2 years ago, inflation went as high as 30, 34%. Please put that at the back of our mind. So, which means if something was like 100 naira before, I'm just using this very rough angle, then it now went to 200 naira, then it now came back to 150 naira. In your mind, if you use 200 to 150, there's a drop. But because the person was previously on 100, it still was off by 50 naira. I hope you understand what I mean. So, because why I'm bringing this up is there are some CEOs or some financial CFOs, they may want to tackle you that go and check Nigerian Bureau of Statistics. Inflation is actually coming down. It is, but coming down from what to what? Where was it 2-3 years ago? I hope you understand where I'm coming from. And when employees are engaging with management or HR, they are saying 2-3 years ago, this was my salary, this is what I could buy with my wages or income. However, this time, even though you have increased my salary by, say, 50%, cost of living has so worsened off and products have gone up by 300%, 250%. Again, we need to also note that some things are also coming down. All right. So we need to arm ourselves with information per period. All right. Now, without trying to jump ahead of the gun, some things may be falling, rice may be coming down. You also need to know. And that is why increasingly some organizations, as part of the solution, because salary increment cannot be the only solution, cannot be the only sustainable solution. So some organizations today now say, let's set up a staff cooperative. When we set up a staff cooperative, for example, we can help employees buy products and commodities in bulk and at a cheaper rate. If you do that, you've not necessarily increased their salary, but you have helped to reduce their cost of commodities. Commodities can be groceries, staple food, rice, and so on and so forth. So you need to check all of these dynamics. Then, we also have exchange rates, naira to dollar. Thankfully, it appears to have stabilized at around 1,400 or 1,450. But the question is, how much was a dollar to naira 2 years ago? It was 400 or 500 naira. So if you move from 400 or 500 naira, and then you move to 15 or 18, then you came to 14, is that real stability? Do you understand what I mean? So when you're engaging with your employees, you need to arrive at a common understanding so that you are using the same yardstick, the same metric, and then you know what you are doing. Again, typically employees will complain to you as HR. I think, forgive me, but companies too need to learn how to complain to employees. Employees are quick to say, before, when I take Uber from my house to the office, it was 2,500. It's now 6,000. Employers too need to say, before, when we buy raw materials, we were spending 2.8 million on raw materials. Now we are spending 7 million. Fire for fire. When you do that, is to moderate expectations, to know that it is from our profits, not our revenue, that we can increase compensation and so on and so forth. Let me quickly also add this. We also need to be a little creative. Creative in the sense that, can you allow employees to also get commission based on additional revenue they bring to the company? Because if you cannot increase salary, increase opportunities to make money legitimately. So if they bring sales, new business development, give them certain commission. If they also reactivate dormant accounts, dormant businesses, give them a certain commission. So these are the things I'll quickly like to drop at this section. Let me hand over to you, Prince, our moderator. Thank you.
Thank you. Thank you so much, Dr. Oluyemi, for letting us know that we can have a best relationship between employees and employers. All right, Mr. Adeyemi, now we're what month into the new tax reform, right? And some employees have noticed higher deductions, right? While others are paying less taxes. Now, how should HR respond when tax changes affect take-home pay differently across employees in an organization?
Okay, thanks a lot for that question, Prince. I think the first thing for any HR to have done is not the action that should be happening now. It's something that should have happened, way before this time. You would recall that it was 26th of June 2025 that the president signed 4 different acts of the parliament or bills, into act of the parliament. And 2 out of them, the 2 most significant ones, the Nigeria Tax Act and the Nigeria Tax Administration Act, only took effect on the 1st of January 2026. Between that time of signing and when it commenced, when both of them commenced, is a period of about 6 months. And that delayed implementation was deliberately orchestrated such that there will be sufficient stakeholder engagement. So the first step for any HR to have taken is enlightenment. What that does is it separates where the anger or expectation of employee, as it were, or the praise of employee, where it should go. The matters relating to legislation of any country is not driven by. Sorry, is anybody saying something?
Apologies, please. Please, let's mute our microphone.
Okay.
Let's mute our microphones if we're not speaking. Thank you. Please go ahead.
Okay. So the issues of changes in taxing legislation is not usually such issues are driven by government of any country. So the first step is for HR to absorb itself of the direct consequence of what the tax implication might have been on salaries, whether to the positive or to the negative, for those that are earning significantly high amount of money, and for those that are not earning a lot, who are the ones that have benefited immensely from the change in the tax calculation. The second thing, of course, is to be sure that the calculation is gotten right. I'm going to say this because anytime you have a change in legislation like this, chances are that organizations might implement wrongly, what the tax code is saying, or might have, the calculation may just be wrong. It has happened before. So entities need to evaluate and reevaluate again to be sure that the way the numbers have been run, is exactly how the provisions of the enabling legislation had required. That's the second obligation that is hanging on the neck of entities. And the third would be what really if the first one has been done properly, which is intense, engagement. If you have union in your organization, if you don't have union, it's all about change management, right? The bill was in the work for over 2 years. Developments were coming on board. People kind of had expectation as to what would happen. And then when the bills were signed into act, they also delayed for 6 months. So if that first step had been properly done, the chances of any surprises would only be remotely possible. But having said that, what is also important at this time is the need to stress the fact that there are reliefs that are now individually driven, and HR must also be well positioned to be sure that their employees, who are going to be ultimate beneficiaries of those reliefs, have what it takes to be able to enjoy such benefit. And I'll give you a classical example. The rent relief, for instance. If you are a rent-paying taxpayer as an employee, you are entitled to claim quantum of up to 500,000 naira, or 20% of the rent you are paying, whichever is lower, as a relief. That is naira for naira value that you are going to get. So anyone who is paying such a rent, it was Dr. Oluyemi that was mentioning the fact that housing and benefit may no longer be sufficient to cater to that particular need. And that's why the draftman for this particular tax law has thought to put that blanket relief there. Yes, everyone will not qualify because some people may not be paying rent, but if you are a rent paying taxpayer as an employee, you are qualified to be able to take advantage of that. So as HR, for instance, what steps have you taken? Have you sent email to your people to provide their rent agreement? Have you sensitized them to know that this benefit is there for them, to claim? It's surprising to see that some HR, for the risk of not wanting to take responsibility for the correctness of the document that would be required, they have absorbed themselves and separated themselves away from that entirely, and not thereby making the entirety of their employees disadvantaged in terms of the tax calculation. Where that was the case, for instance, you will see that there will be a significant dip in the take home of the employees, even where the provisions of the tax law has indeed provided sufficient cushion for those things to happen. So this is not the time to absolve yourself of responsibilities. HR and payroll have traditionally been 5 and 6. It's like bread and butter. So you can't run away from it. And during this period of change, it's important that the change is managed quite effectively, and you also rely on what the expert opinions, what they are in effecting that. I'll stop here for now so that we can take it even deeper. Thank you.
Thank you. Thank you so much, Mr. Adeyemi. Now, back to you, Doctor. Now, earlier you stressed a bit on inflation, right? You touched a bit on it. Now, let's stretch it further. Now, inflation in Nigeria typically affects essentials, right? Food, transportation, housing, more than any other categories of essentials in the country. Now, how should HR prioritize which employee costs to address in compensation design?
Okay, thank you for that question. The first thing I'd like to say is that increasingly, one of the dimensions in compensation and benefits we need to focus on, in my opinion, is choices and options for employee. I'll say that again. Choices and options. And let me use some examples. The era of rigidity is gone. What do I mean by rigidity? There are some organizations, they do upfront housing. They pay rent once a year. By option, we mean give employees the choice to either collect their rent once a year or be collecting it every month. What works for employee A may not work for employee B. Employee A may be living with his parents and may not need a bulk rent. Employee B may be hustling. So upfront housing is good or bad is relative to the beneficiary. When you as an organization insist that I must pay my rent upfront or I must pay every month, that is where the problem is. Choices. I'll give you another example. A friend of mine who works with a top organization, we all know, is a global organization, said they had to rename a particular benefit. They called that benefit miscellaneous benefits. I'll say that again. Miscellaneous. Do you know what miscellaneous means? It means it covers anything. Why? Let me give you specific benefits. So when you say you have gym allowance or gym benefit, you know what happens, ladies and gentlemen? How many people go to the gym? Now, the company pays the gym benefits. They pay it to the gym collects the money, the staff doesn't go to the gym, the employer has lost the money. They now said, look, instead of gym benefit, by the way, I'm not the marketing gym. Gym is very good. But when we now call it miscellaneous, if for you, gym is what makes sense to you, you just bring invoice from the gym and we pay the gym. If for you, what you need is support for your nanny, you just get invoice from your nanny and we pay your nanny. If for another person, maybe you have a dog, you want to take the dog to the vet, you bring the invoice. What now happens is that this particular benefit, there is a percentage to it or is an amount. For example, it can be 20% of your gross. So by that miscellaneous, it means that anything that matters to you as a person, as long as it can be invoiced or receipted within a particular month or year, you can claim it. Did you just get that? By democratizing that component of the salary, instead of locking money permanently to gym, sorry, I'm just using gym as an example, we have freed it up to other benefits or purposes as may be pleasing, supporting, or comforting to the employee. That's that. The other thing, I alluded to it, and it's a popular thing even in economics. We use the word, we have what we call minimum wage. We also have what we call living wage. Living wage just means you calculate all the items. For example, again, we're not talking about a eyebrow restaurant. We are talking about buka, mama put. How much does it take to buy 2 or 3 fufu, amala, rice, a decent plate? If the typical person eats breakfast, lunch, and dinner, how much are these plates? How much is it per day? And you calculate. Then you will know whether you should be paying 70,000 naira or you should be paying 180,000 naira. Sometimes HR, you cannot hide that, no, the labor law says, or the minimum wages. If the minimum wage doesn't make sense, it doesn't make sense. Your employees know whether it makes sense or not, and you too, you know. With due respect, some of us here, the pocket money, I mean the older folks, the pocket money you give your children on a monthly basis is higher than how much some of us pay staff who come to work every day. Come on, let us be what? Realistic. I also said it and I will say it again. Let's provide support. There are 2 types of support. There's the financial and the non-financial. I'm trying to use examples we can relate. Now, let me give you a non-financial support. Do you know that there are employees in our organization today who live in the same area, but they don't know? I'll say that again. Especially for those of us in big organizations. We have employees who live in the same area, but they don't know. You have access to the database. If you know 6 people who live in Ikorodu and you bring them together, let them know you are all living in Ikorodu, what can happen? They can carpool. If all of them are mobile, they can rotate who drives every other week. If they are all taking Uber, they can share the Uber together. Ladies and gentlemen, helping people financially or economically is not only when you give them money. You can also alleviate. You can give them information. You can give them what? Knowledge. That's why some organizations today also try to do things like staff bus. That is to cushion the effect of transportation. Transportation is a key fundamental in cost of living, same as housing. Are we together? Now, talking about transportation, if genuinely, depending on the nature of your business, you can allow some hybrid work, flexible work, instead of 5 times a week, can you do 4 or 3 or 2 or 1, depending on the peculiarity of your organization and the sensitivity of your leadership, managers, ownership? Some businesses cannot allow that. Again, you may also want to check your shift pattern, considering health and safety. Note, I'm choosing my words carefully. Consider your shift pattern. Now, there are some organizations that instead of 8-hour shifts, they now do like double shifts. When you do double shifts, you now have 1 day off. By doing double shifts, you have eliminated transport costs. Some organizations too have also today invested. They will rent an apartment close to the office space, and then the company pays the rent. It's like, for lack of a better word, like a dormitory or hostel with bed spaces. You provide a kitchen or kitchenette, microwave, gas. So staff may come maybe on Monday, go on Friday. This may not be applicable for all categories of staff. Men may be able to do this more than women, depending on the, you may not have complete privacy, but these are opportunities. You may also want to tinker with your work hours. Now, you may maintain the 8 hours. Should it be 8 to 5 or 9 to 6 or 10 to 7? And some of these flexibilities, because some people's cost of transport is high only at rush hour. Once you are dynamic with the resumption time, they are not pressured to leave their house at rush hour, and the cost of transport drops. These are fundamental intelligence we can gather if we continue to engage and talk. Then you can also enter into discussion. I don't want to mention brands, but there are supermarket chains, the FMCGs that you can say, hey guys, we'll buy products and produce from you as a collective, almost like a cooperative. So let's think outside the box. I end by saying, let's also ask staff, what can we do to help you? Don't be afraid to ask that question. Yes, it's not all the help they ask for you can provide, but sometimes staff ask for things that are cheap or non-monetary or affordable. Don't think you can think of all the solutions. So our employee surveys, our polls, ask them for suggestions for solutions. Let me also add, especially when you are recruiting new people, as much as possible, you can let proximity be a factor, especially for roles like maybe cleaner, driver. You understand? It's not fair when somebody is using half of their salary to transport. Now, if the person is a professional service provider, relatively they will be so well paid that they can live anywhere and they will get the job done. So let's continue to engage with our employees, consult, and then continue to network, peer-to-peer learning, just like we're having in this session today. You can see I've tried to mention some ideas. Please, if you also have other ideas, drop it in the comment section. We will read it there, and we can also mention that. All right. My prince, over to you, sir.
Thank you. Thank you so much for those solutions you've provided, Dr. Oloyemi. Mr. Oladejo, back to you now. Now, if an employee's net pay drops due to this increased taxes due to the change, right? Now, even without employers taking action, do organizations have a responsibility to cushion that impact, the impact of this increased taxes? Because I'm looking at the chat box now, and there was a comment around, oh, would organizations even increase salaries to cushion this? Now, do they have a responsibility to cushion this impact?
Okay, I will speak. I will address that in two dimensions. The first is based on the clear provisions of the enabling laws. Organizations do not in any way have such responsibilities. So that is just sticking to what the law says, what the tax law says. The obligations of organization is to deduct accurately what the taxes should be, and whatever the net comes to, it is what it is. But having said that, implementation of laws, especially from an organizational perspective, must also be done with human face. And I tell you what some of my clients, have done over the period. Even before commencement of the tax law, once we've had certainty as to the version that will be applicable, we had a bit of drama as to what version is the final version and all of that. I'm sure those that have followed the conversation keenly would know what I'm talking about. But immediately it became certain that this is what would apply. Some very proactive organizations had reached out to say, give me an impact assessment, impact assessment of what this would have on my employees. And the employees that are going to be suffering significant amount of it, those organizations did make up, the difference, such that in setting the needle for the remuneration for the new year, that variance, that negative variance impacted what percentage they were going to be adding to it, such that the adjustments would be made. Because what has happened to some people is, if salaries were not adjusted from December to January at all, some people will actually take home lower than they took home in December. And you know how disastrous that can be, where you've had obligations, loans, everyone, you already know what everyone is taking from the home front to the urgent 2Ks, and all of that. So you would certainly have some impact there. And think about it this way: is the happy chicken that would lay the consistent eggs, right? So it is in the overall best interest of organizations to ensure that the employees are happy, even though they do not have a legislative obligation or an obligation that is driven by law to make up. It is just in organizations' overall best interest to ensure that their employees are not worse off. And from my experience, organizations that have done that, have of course been able to demonstrate the commitment, that they have towards their employees, that we are in this together, you are not alone. Do you remember during COVID, for instance, some organizations, laid off some people, some organizations cut salary, some organizations said we are going to manage it by not promoting anybody, but your salary will remain, and the actions that some organizations took during that period determine the loyalty that it's been 5, 6 years now after COVID, and I can tell that it has impacted greatly the extent of loyalty that employees have given to such organizations. So, put simply, there is no legislative provision saying that organizations should make up, but from the face of human, implementing with human face, and also in the overall best interest of organizations, what I have seen personally is that organizations, a lot of them have indeed made up. Thank you.
Thank you. Thank you so much, Mr. Adeyemi. All right, Dr. Oluyemi, back to you, right? And now for a while now, right, we're seeing a stronger demand for cash-based relief rather than long-term perks from employees, right? Now, what does this shift say about workforce financial stress and the evolving expectations of employees when it comes to pay?
Okay, so you see, pay is dynamic. Even though I know that in the field of HR, a comp and bench sometimes looks like it will be static for a while, and then there'll be some new waves or revolutions, but some things are constant. But people are changing, people are different. We have different generational workforce. Even in the same workforce that we have a situation where, for example, you hire somebody, is single, and when you hire that single man, I just want to use this as an example. If you tell a single man, a bachelor, a chronic bachelor about HMO, they don't care. In fact, the bachelor will say, please, 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 HMO, no need. I don't need HMO, give me the money. Why? The person may probably never fall sick. But let that same bachelor get married, not just get married, let the wife become pregnant. Once you become pregnant, permit me to use this, there are some statutory hospital visits, like antenatal. By the time you do one antenatal and you pay out of pocket, you will now say, shebi my office has HMO. So which means the employee life cycle, the employees will value different parts of the compensation and benefits. Are we together? There are some people, if you tell them, maybe an employee who is 25 or 28, pension, they will say pension. I beg, give me the money. But if the employee is 51 or 54, pension makes sense because you can see retirement 6 years away. Why am I bringing this up? Is to say, in comp and ben, generally speaking, and specific to our topic today, it's like food. The best way to position food is to have a buffet. A buffet means it doesn't matter if you like rice, you find it. You want beans, you find it. You want swallow, you find it. Because you have a diversified workforce. So perish this one size fits all. You understand? That one size will work for some people, it won't work for some other people. And you want to carry your entire workforce, you want them to be productive. So again, let's ask them. That's why in any survey you do, especially if you do annual or biannual survey, there should be a component on compensation and benefits. And don't just say, are you satisfied with your pay? That is not the only question to ask. It could be, are there benefits that we should be providing that we are not? Are there benefits we are providing that you don't want? You know, and people are even saying that today, why should I, this hypothetical, if I'm paying Prince $1 million, Nigerian Revenue Service, this hypothetical, please, before they go after Prince. If I'm paying Prince $1 million a month, why should I tell Prince that $100,000 is your transport allowance? $200,000 is your housing allowance. $50,000 is your furniture allowance. I should just say, Prince, your money is what? $1 million. Prince is an adult. In fact, he's a prince. He should determine and apportion the 1 million based on his reality. His reality now may be different from his reality in 2 years' time. You can allocate more to rent or less to transport, as the case may be. So, choice. I may sound like it's a broken record, but infusing more choice is something we should think about and we should tinker around. It will help us. And then flexibility. Okay, flexibility with respect to payment. Do you want to consider quarterly payments? Let me say this. In one of the places I've worked, some of you know I've worked in quite a number of places. There's one allowance. We call it school support. We pay it every September. But can I shock you? They only paid married people with children that support. So if you are a single, you are not going to get it. The only condition you get it as a single is if you are a single father or single mother and there is evidence that you have children. Do you understand? Because that particular benefit is only to support people whose children, you know, if you have children in school, you will know September is a special month. If you can't relate, don't worry. God will answer your prayer if you desire to be able to relate. I'm saying there can be some, not all benefits must be for all staff. You understand? And you can call it anything, you know, as much as it makes sense to the staff. And that's why we say consult with the staff, engage with them. When they share 20 things with you, 3, 4, 5 may make sense and you will be able to. Let me also say this. Some organizations today help their employees establish a credit line where you can buy something on credit as long as you're a member of employee. In this instance, you've not increased salary, in quotes, but you have increased access. Let me say this. This will affect just 5 or 8 people on this call. If you're on this call and you don't pay salaries on the same day every month, please stop it. Please stop it. Try your best. If you are paying on the 25, pay on the 25. If you are paying on the 31, pay on the 31. Do you know why? Any organization that pays employees anytime, anyhow, you are doing a disservice to the employee. Do you know why? Any staff that doesn't collect salary on a fixed date every month will have difficulty accessing loan or overdraft. Because when banks or financial institution wants to give loan to a person or credit, they don't just look at amounts, they also look at what? Consistency. So when you are paying salary, that you pay well is good, and that you pay consistently is also what? Good. So if you improve your consistency of payment, that's also a plus. I'll give you another idea. You may consider it. Some organizations also pay twice in a month instead of once a month. So maybe you pay by the 10th and then you pay by the 28th. It helps for cash flow. Some people's problem is not the money, it's the timing of the money. If you give them bulk once, they will spend everything. Of course, if you're also doing bi-monthly payments or paying fortnightly, give employees the choice. They should be able to sign in to pay me every 2 weeks or pay me once a month. I hope I've been able to help in some ways. Over to you, my prince.
Fantastic. Thank you. Thank you so much, Dr. Oluyemi. Now, Mr. Oladejo, Dr. Oluyemi has given us some creative ways to structure payments within an organization. Now, what common mistakes do companies make when trying to be creative with pay during periods like this?
You know, as an accountant, when you hear that word creative, you can be creative in all things, but you must not be creative in accounting. Once you are creative in accounting, there is already a problem. So immediately an accountant hears that word creative, your hair will definitely tingle. And I can tell you that, I mean, creativity is good, but tax, of course, is resting on accounting. And I mean, in the old law, for instance, there are certain nomenclature that would attract certain tax consequences. And I'll give you an example. If you buy vehicle for your employees, even in this current tax law, right? Let's say you have some senior management employees and you have decided to, you bought vehicles for them. Let's say the vehicle costs 30 million or 40 million each. The tax consequence of buying vehicle for them will be different from paying them, that 40 million naira, however you choose to pay. If you pay that 40 million, some people will say we'll pay you over a period of 4 years. I will pay you 10 million if you stay. Some people will say we'll pay you the 40 million at once. I've seen a bank that did that. They paid the money at once and said, it's up to you. You deserve to have a vehicle. The value is 38 million. And then they paid the employee the 38 million at once. In this season that we are in, those two examples, even though the intention, is the same, those two examples would attract different tax consequences. And this is the time for HR professionals really to pay attention to some of these things such that the intention or the intent of the management can be properly guided and the good faith that the management has intended to show towards any category of employee will not be eroded, by sheer ignorance, eroded by the tax law, which is driven by sheer ignorance. In the first example I cited, where the 40 million is paid in cash, whether it's quarterly or yearly or biannually, however you pay it, the entirety of that 40 million is going to be subject to tax in that year the payment is made. I'll take that again. In the first example where the 40 million is paid to the employee as cash, however it is paid. Some people will say structure the payment, pay one in first tranche in January, pay the second tranche in December. As long as you pay that money as cash, even though it is designated towards the purchase of a vehicle for the personal use of the employee or as a status vehicle, the entirety of that amount is going to be taxed in that year. The second example, however, where the vehicle is purchased by the company and made available for the use of the employee, only 5% of the value of that vehicle, the law says, is going to be taxed in the hands of the employee. So when you look at the two, in the first instance, the chunk of the entire cash is going to be taxed, and the bulk of that money is going to be paid as tax, on behalf of the employee. In the second instance, only 5% benefit. So it presupposes that the law is seeking to tax the value of that use of vehicle over a 20-year period, because 5% before you get to 100%, that is 20 years. The question is, would that vehicle still be available for 20 years? So the intent of the tax law is not for you to pay tax on the entirety of that money, as long as you follow a beneficial route. So I've cited this example just to justify the fact that this is not the time for HR professionals to continue to do the things they have always been doing, the way they've been doing them. There are incentives now, and an incentive that comes to my head at this point is with respect to mortgage. For instance, if you have owners occupied housing, and you have taken mortgage, to get that apartment, the entire interest on that mortgage right now is going to be tax deductible. These are conversations that HR professionals must have with their employees, such that rather than pay the entirety of your tax as tax, you can have part of it, used to offset some of these additional obligations like interest on the mortgage, for the house that you are living in as a taxpayer. So when you put all of these things together, you would see that the knowledge of what to do and what options are available to you, whether as an employee or as HR professional to advise the employee. Where it gets dicey is that some of these things are employee driven. It's not they are not reliefs that HR can unilaterally decide that they are going to do for an employee. HR should just be in a position where you can guide and say, if you do this, this is, what will happen. So I hope this helps. I think I should stop here so that I don't take too much of the time.
Thank you so much, Mr. Oladejo. We appreciate the insights. Now, Dr. Oluyemi, still talking about compensation and inflation. Now, when companies cannot match inflation with salary increases, right? What makes employees still perceive pay as fair rather than exploitative?
Okay, thank you so much. In no particular order, the first thing I would like to say is that communication is key. Communication is what? Is key. It's like if I go and visit Prince at home now, because he's a prince, I will expect royal treatment that will serve me 3-course meal. But if Prince says, Oluyemi, this is your first time of visiting me at home. However, I just paid my house rent. I am very rich now. I can only give you 2 loaves, slices of bread. What changes? I will accept the 2 slices of bread with gratitude. Why? Clarity, context has been provided. Organizations sometimes miss it because they are expecting the employees to be aware and they're expecting the employees to understand. First, the employees may be aware, but aware of what? They may be aware of the wrong things. So you need to have a conversation, a dialogue, a town hall. And I'm not talking about Bala Blue here. Real, meaningful town hall. That's why, as much as possible, can the financials of the organization be presented to the employees as much as possible? And transparency is key here. If you are making 10 million naira per month and your cost is 9.5 million, what's the revenue left? What's the profit? 500,000. You see, the moment employees know how profitable you are or otherwise, it will moderate their request and their ask. Of course, this is now relative to internal equity between one rule and the other. Having said that, increasingly now, some organizations are now devising additional ways for employees to earn more money. One of them is commission. If you are not in sales department, for example, they can say anybody who gets us a new customer, reactivates a dormant customer, helps us with revenue one way or the other, we give you some 0.5%, 1%, 5%, 2.5%. That way, we are saying, in addition to your salary, you can increase your variable income. That's one. Another thing is performances and bonuses. You can introduce monthly, quarterly, biannual, annual bonuses. Don't forget, bonuses are only paid from what? Profits. But the beauty of paying bonuses, for example, monthly or quarterly, is the end of the year may be too long. If people work hard in Q1 and you pay them the bonuses in April, it will now serve as an incentive, as a motivation to work even harder so that they can get another bonus. But if you are waiting till the end of the year, they may become cool, flat-footed. They may become tired. You understand? It is very, very important. So communication and transparency and increasing opportunities for employees to earn income internally. Let me add this, and I'm adding this carefully and respectfully. Also, increase employees' opportunity for side hustle. Note, side hustle must not be a conflict of interest. So your side hustle cannot be the business or a related business. I know companies today, when they have any party, guess who the DJ is? It's a staff. They will even announce, we want to have a party, we need an MC. They will pay you the MC honorarium, maybe not as huge as the, what do you call it, street honorarium. They will pay you DJ. It may not be as high as catering, decoration. I was at a party recently. All the services were provided by staff. Did you get that? And they paid them. They paid for that. Some may also help maybe spouses for married people if they are doing businesses and so on and so forth. So let's look for ways to help people increase their income legitimately. Let's also help look for ways to reduce, mitigate their cost. I mentioned car sharing, pool sharing, ride sharing, very, very important. I've also mentioned buying, I'm just saying women may appreciate this as some men. When you organize for your staff that you can, if you're interested in cow sharing at the end of the month, you'll be amazed at how you will increase the quantity of meat, protein for the family at a lower cost. Same thing for provisions. So let's speak to how to help increase their revenue or income, how to mitigate their costs, remote working, hybrid working, flexible working, and so on and so forth. And let's also, permit me to say this kind of training, AEHRP has graciously provided, as HR, facilitating for your staff. We need financial intelligence more than we needed it 5 years ago. It's very important. And then lastly, empathy. People are going through a lot, including the owners of the business, including management. But please, this is not the time to be toxic. When toxicity is now more expensive than it was 3-4 years ago, please. All right. I'm saying this offline, but I'm on record. You are a line manager. You are HR. A junior staff follows a senior staff home. This is 6 o'clock. The senior staff is ready to go home, but the line manager of the junior staff will say, no, you can't go home. And you know that the other senior staff will not wait for him. And you let him miss his ride home. That's lack of empathy. You can say, okay, join in. If you can work, continue on your phone, or when you get home, or come tomorrow morning and continue. Please, these are simple ways we can extend support. Over to you, our moderator, Prince Obiaku.
Thank you so much. Very wonderful insight. All right. Before we take the next round of questions, please, if you have questions, participants, please drop them in the chat box and we will take them in a few minutes when we get to the Q&A session from our audience. Also, recall that this session has been approved for 3 general recertification units by HRCI, and certificates from AHRP are valid for CIPM membership upgrades and HRPL certifications as well. So the link to request for certificates for this session is in the chat box. So please do that and grab your certificates now. All right, Mr. Adeyemi. Now, in fairness discussions, right, when we're talking about fair pay and all of that, employees typically focus on the net salary, right? But employers budget using the gross pay or total employee cost, more or less. Now, how should HR reach this disconnect between the employee's focus and the employer's focus?
Yeah, I think there is only so much, that HR can do. But I think one thing that would help is helping employees see the total picture. Now, when you even talk about gross pay, you have not even captured the entire cost. In accounting, the focus would be um, total cost of employee, which is what you typically see under ledgers like employee cost or payroll cost. Payroll is just a subset of employee cost. I'll give you an example. If you have if you have organization that they give lunch, for instance, that lunch is a cost of is a cost borne on their employees, right? But it will, in most cases, especially when you are giving to production, production floor employees and all of that, it may not form part of their remuneration. So you will not see that on their letter. Or you have costs like uniform, for instance, or you have entities that have coffee stands, here and there, or they share beverages, and all of that. All of those things would add up to, employee costs. But you will not see that on your letter. So it will not even form part of your gross. So what you see as your gross is still a subset of indeed the entire burden that the organization is carrying. So I think it's a balancing act. It is a conversation that would never, because frankly speaking, everybody wants more. Everybody wants. It doesn't matter the amount of money I mean, I've been privileged to work with some top guys, and you would wonder if you already have this position that you have as the MD of a bank, or you are greatly positioned, and you are wondering why are you complaining. So the point is, I do not think it's a fair expectation to assume that there will be a time when employees would say, "Oh, everything that I'm getting from this company, I love it." The company will keep looking at its total cost. What we can do as HR professional is to bridge the gap. Those silent costs that do not form part of gross pay. Let the employees know that, the company is also responsible for X and Y. In some instances, some companies, we try to be creative. We can use creative now when it comes to HR by bringing all of these costs into payroll, or bring them not into payroll now, into employees' employment letter, such that the gross is so much. But because those costs are typically designed to be silent costs, you will see that it will not so much impact your pay. In fact, the opposite would happen, because by the time the taxmen are then looking at the books of the company, those costs that you have treated as non-taxable, quote unquote, because you believe that they are silent costs, the taxman will demand that you pay tax on them, because the way the tax laws are crafted is such that every benefit, except for the benefits that the ones that are specifically exempt by the tax law, every benefit that flows from an employee under an employer-employee arrangement is deemed to be taxable, except for the ones that are clearly exempted. So the more you even bring some of those silent costs, into the gross pay, the more complicated it is likely to become. There are certain things that are benefit, as it were, but they are not, that they are available for the employees use and be able to, they will help the employee to be able to deliver their functions well, but they should not constitute costs that should be communicated as part of their gross pay. So the only role I think HR professionals can play in this regard is to help, at sessions like this, at town hall meetings, at meetings that are put together, help employees see the total picture. Communication is really, really key. When a company is doing well, this is the season where whatever the employment has promised, the employment should stick to it. The company should stick to it. If you say once this parameter is met, there's going to be bonus, you have to ensure that there is bonus. You have to communicate that that parameter has been met and indeed there's going to be bonus. If you say, oh, we didn't meet this parameter, we did quite well, we were close to it, to that extent, even though we're not supposed to pay bonus, we would pay X percentage of it. Something that just demonstrates that you are indeed committed towards ensuring that the quality of life that people live, is better overall. So I think that is the balancing act that HR professionals can take up, rather than think that there is nothing that they can do, because the struggle would always be there. Company will always see the total picture, not just the gross. I've said that the total picture is even higher than the gross, is employee cost, total employee cost. Let them see that, and then employees would also appreciate what goes into that. Thanks.
Thank you so much, Mr. Oladejo. Right, Dr. Oluyemi. Now, before we go into taking questions from our participants, now, in recent times, we're seeing global salary comparisons through social media and remote work influencing salary expectations, right? Now, how should Nigerian employers respond without creating unsustainable pay structures? In recent times, people just go to Glassdoor or similar platforms to check, what's the salary for this role and this role. Of course, they may not be the true pictures of what it is in our own client. But then how should Nigerian employers respond to these influencers that they more or less have no control over?
Thank you so much. That's a very good question. I smile because when you compare, there is what we call apple for apple, mango for mango. And I know we're in a global scenario, global world. And the reality is that certain roles are more influenced by global trends than others. Now, take specific roles, maybe IT. The services of an IT specialist may be demanded from anywhere in the world. And the nature of the job is such that it can be done remote. But if you are in an occupation that you cannot work remotely, you may not enjoy the same kind of benefits. So it means when you are trying to recruit or fill a role, if you are looking for top talent, note my phrase of my choice of words here. I didn't say talent. Top talent. Top talent will typically be visible and attractive to other organizations from anywhere in the world. If you're an average talent, forget about it. We are not talking about you now. Okay, this applies only to top talents in certain critical roles. The top talent will have the option of either working for an indigenous or a local or a multinational situated in Nigeria, or work remotely anywhere in the world, or even physically relocate. All of these are options. But because you are trying to pay competitive, it is important that you can pay competitively if you are also earning competitively. Let me say that again slowly. So if you want to pay world-class salary, are you getting world-class revenue? Prince mentioned it very early in this conversation in his opening comments, talking about ability to pay. So again, I'm an IT company in Nigeria. I'm nowhere near Microsoft or Oracle or SAP that has presence in 150, 130 countries. Me, I have presence only in Lagos. I cannot pretend that I am Microsoft. I can only do my best. And then now look for other things to augment. Part of the other things, for example, can be a good culture. can be providing support, flexibility, and other palliatives like that. It's just sad, you know, as I move around, I see that sometimes it appears that the most poorly paid organizations are also the most toxic. Poverty is a bastard. Ladies and gentlemen, so do your best, but in doing your best must be what? Sustainable. I won't mention, I used to know an organization, some of us know it was a bank, they doubled the salary of everybody in IT. Just IT, you know why? In like 1 year, almost half of their IT jackpot. But guess what? Everybody in other departments started agitating to say, no, do you want us to jackpot too? We too can migrate to. So as you are trying to solve an industry-specific problem that applies to a department, there will be multiplier ripple effects on other. So you look at internal equity, cross-departmental equity, and value. This one, don't quote me. That is why you need to have a pipeline. Two sides to the pipeline. Succession planning, especially for senior roles, and pipeline for bringing in new people. People will go. The way the world is designed, people will die. But as people are dying, new children are being born. So you want to look at your graduate training program so that your attrition, if for example is 8%, if 8% of the people are going, you're able to fill them with another 8%, because you will not always be able to match. Okay? I pray that everybody listening to this call will get the kind of job opportunities that others will not be able to match. We'll be here to rejoice and celebrate with you. Over to you, my moderator.
Thank you so much, Dr. Oluyemi. All right, so dear participants, if you have questions, please use the raise hand feature and then we'll allow you to speak, or you can put your questions in the chat box. Okay? If you want to speak, please use the raise hand feature and then we'll let you speak and ask your questions. You can direct your questions to either of our panelists and then we will take them. All right, so while we're still waiting for hands and questions, Mr. Baladejo, I know you touched a bit on this earlier, but perhaps you can speak on it extensively. Now, are there tax efficient compensation elements that organizations underutilize that could improve the perceived fairness in pay?
Thanks a lot, Prince, for that question. I think a lot of generalized relief, or reliefs, I should say, have been repealed, by reason of the new tax law. So there isn't room for creativity. Let me use the word again, where you can say this does not constitute my gross, this is part of my gross, this is not part of the gross. All of those things have been narrowed down. In fact, the general relief that used to be very popular, the CRA, which was 1% or 200,000, whichever is higher, plus 20% of the gross pay, had also been abolished, because in that instance, it then gives the opportunity to juggle what the gross pay is, and all of that. So in terms of blanket provision that covers all, I think the closest to it that we have now is the rent relief. And I think I've mentioned that. I should also say, for the benefit of everyone on the call, because every HR professional is also an employee and is a taxpayer by implication, that if you are in an organization where for whatever reason your organization has chosen not to consider or be a part of your rent relief calculation, the relief is actually not lost. Some people have asked me, is the relief lost, and all of that. When this new tax law came into being, when I saw the level of questions, and engagement that people were coming up with, I had to start setting up ring light, and start providing some 1 minute, 5 minutes, videos, on YouTube, just to be able to educate people. So I'm just saying that here freely to say that even if your organization is against it, Because I've seen some organizations that say, I don't want to be a part of validating the authenticity of the receipt and agreement you're going to be providing. Therefore, I'm not going to consider it. That may be if that's the position of your HR director or your MD or whoever is supervising your work, there's only so much you can do. But the comfort you can give yourself and your employees to say that the relief is not lost, the relief is not bound to the employer, graciously. The relief is tied to the employee or individual taxpayer. So if your employer does not claim any particular relief for you, you can still proceed to claim that relief at the point where you are doing your tax filing, later in the year. I just wanted to mention that, very clearly. So another thing that can be considered, again, it's an individual affair. Companies are only going to facilitate by recognizing the arrangement that the employee has gotten into is the issue of life assurance policy. Again, this is not the time to take your tax affairs the way you've taken them prior to 2026, where it is whatever the company gives you. When you get your next payment, your pay slip, look at it. Look at the amount that is going to tax and ask yourself, is there anything I can use? Because what it means is that that amount can go to something else. That amount can be for a life assurance policy for yourself and your spouse. Some people don't know these things. These things are there. If you have an annuity plan, for instance, where you pay, there's a sum assured that's going to be paid in the unlikely event of a sudden death, at least you know that the money is going towards something. Nobody wants to die, I know, but we all want to go to heaven. But should death happen, in a manner that is sudden, that amount that you are paying in taxes, just letting it go to the government, can be set aside, part of it at least. You can look at the amount. Your tax is 250,000 monthly. What does that mean per annum? That means I have this much window to be able to pick up a policy for myself and my wife. You want to consider that. Another thing is also to look at voluntary pension contribution. The reason organizations have structured pay components is because there are some other statutory obligations that are dependent on those pay components. And a classical example is the pension. Pension is, you're looking at the BHT, right? And then the organization will look at paying 10% while you contribute 8%. Now, 8% of what? 10% of what? If those structures are not there, the amount that the organization will pay may balloon, and the deduction that you would also pay may balloon. But beyond that statutory deduction, employees also have the opportunity to contribute additional voluntary contribution. That voluntary contribution you make is also going to be taken as a deductible. So what it means is that if your if your tax supposed to be 250,000 monthly, if you pick up additional contribution of 200,000, it is naira for naira. What it means is that your tax will reduce by 50%, reduced by that 200,000, and you only be paying 50,000 naira. So these are some of the things that employees can look into. There are a couple more, HMO, some big management, top management guys are now saying, put me on the Bupa plan. I want to be on the Bupa plan because I don't know if I fall sick when I'm in the UK. I want to be able to access care. Instead of paying 50 million in taxes, let me pay Bupa and all of that. So my point is, this is not the time to be non-participatory. Let your pay slip come off to you differently now. If you have not taken a look at it before, take a look at it again. And as a HR professional, you have that burden and obligation of enlightening others. And you can only give what you have. If you don't even know some of these possibilities, it will be difficult and challenging for you to even guide other people that may come to you. All hope is not lost. We are all, it's not a case of there's nothing we can do. There are things that taxpayers can now do. Just recently, I don't know how many people know about the Ministry of Finance, loan intervention of up to 100 million naira. Those that have you can buy an apartment now. Stanbic is part of the participating bank. Fidelity is part. Those things are new initiatives that are coming up. I'm saying that these things are there. They can be picked up rather than folding hands and believing that nothing can be done. I hope this helps.
Absolutely, absolutely. Thank you so much, Mr. Oladejo. All right, so we have the hand. Judith Iheanacho, please unmute and ask your question. Let us know who you are directing your question to, please. Judith, please unmute and speak.
Hi, good evening. Sorry, that was a mistake. That was really a mistake. I apologize.
Okay, that's fine.
Thank you.
Ayobami,
Thank you.
go ahead. Ayobami, please go ahead and ask your question.
Hi, thank
Good
you
evening.
for this wonderful section. It's been quite insightful. So the question is for either of the speakers, right? And two questions actually. So Dr. Aliashu mentioned there are so many ways to just help to relieve employees. It doesn't necessarily have to be the take home itself, which I totally agree with. But in such a situation, does that imply that companies are moving away? So you also mentioned rather than waiting to the end of the year to do an incentive or an increment in salary or whatever the benefits might be, are companies moving away from annual salary reviews to be more flexible, to more flexible pay models, right? So rather than you waiting, are you saying companies should move away from annual salary reviews for more flexible pay models? I think that question is directed to Dr. Adeosun. While for, please, can you hear me?
Go ahead.
Can you hear me, please? Yes, and for Mr. Oladejo, right? What compensation practices do you think are becoming unsustainable in this 2026 economy, especially with the tax reforms that is practically affecting those that are on high salary or perhaps high salary limits? Thank you.
Thank you, Ayobami. Dr. Oyemi, please go ahead.
Okay, thank you so much. One thing I've tried to communicate today, carefully, softly, and intentionally, is that avoid one size fits all. Okay, so what may work for company A may not work for company B, but we are saying be time sensitive. What do I mean by be time sensitive? If you are going to pay me, if I have earned hypothetically one
Dr. Oyemi's internet has been disrupted. So we'll just give him a minute or two to rejoin us. But Mr. Oladejo, do you want to go ahead and provide an answer to Ayobami's question directed at you?
Okay. In terms of practices that are no longer sustainable, I think the most prominent of them that comes to mind right now is just continuing on your existing pay structure. Some of the, and I mentioned it at the beginning of the call, some of the drivers of the pay components. For instance, you see some companies, their financial year is still runs through April to March. And if you are familiar with the government fiscal year back in the day, that used to follow that time. Government fiscal year used to be from April of a year, to March, and budget used to be fashioned along that. Some companies have sustained that till today, 2026. And I'm telling you that it's the same thing that you'll find even in pay structure. The era of maintaining the pay structure that you've had since time immemorial, the era is gone. You need to look at things now and say, what does this pay component mean? What is the tax consequence of this pay component? If I do it this way, what does it mean? If I do it that way, what does it mean? You have to evaluate, properly the implication of your intention, towards the employee. Because for all you care, your intention may be good. But you see, you have to look at what does that mean, based on the express provisions of the tax law. Where your intention will make the employees worse off, you may want to change that intention. And I think I cited an example as well, using value of of a car that's been provided. The same goes for accommodation. Some employees, some companies will say, we'll give you this accommodation. If anybody gives you accommodation, the value, the entirety of the market value of that accommodation is deemed that the employee has earned it. So you may want to look at it and look at what can help. Should I help these employees, this set of employees, discuss with a bank, put my credibility on the table so that with the fact that I'm backing them up, the bank can grant them X level of loan that would be useful for mortgage, which the bank would ordinarily have not been able to offer to them, if my backing was lacking. Those are the kind of creativity, let me use that word, that should be going on right now. And I tell you, as HR professionals, we are positioned to lead, to take the charge and the lead in those kind of conversations, because you see, the board isn't going to look at it, right? The MD may be bothered, but the HR is the bridge. You are the one, you are interfacing with management, upper management, and also interfacing with the employees. So you should look at how do you present this such that the management doesn't see you as being unnecessarily cantankerous, and the employees are also not seeing you as being on the management side. So I just hope these would help you, Ayobami.
Thank you so much, Mr. Aladejo. Dr. Uyemi, do you want to complete your response from earlier before we go ahead? Dr. Uyemi, can you hear me? Hello, Doctor.
Yeah, sorry, network issues. So let me just wrap up by saying that there will always be need for annual merit increase, and there will also be need for annual cost of living adjustments. But because of shocks and volatility, where there are significant increments or decrease in certain parameters, for example, PMS, petrol, if there is a 50% upward review, if you can do a 50% or some percentage review of only the transport allowance, please do so. If you can do it. If you can't do it, engage with the staff. Let them know that you are aware of this. This has gone up by this extent. This is what we can do, or we can do nothing. Oh, we can do nothing because we can't afford to. Don't just keep quiet and hope they will understand. They are not witches or that they are reading the mind of the management. They are not the management accountant of the organization or the cost accountants. They don't have don't assume employees have visibility. If they have visibility, it's to your revenue. They typically don't have visibility to your cost. Way back, I remember I used to work with a telecom. Everybody knew that time, this is almost 20 years ago, that we were having a revenue of 12 billion per month. But less than 5% of the employees knew our diesel cost alone was 2 billion. Do you get that? 100%. If you ask any staff how much do we make a month, they will tell you the revenue. Ask how much do we pay for diesel? They will say they don't know. And we were making revenue of 12 billion, and there are some months we were on losses. Do you understand what I mean? But whose fault is that? The team that is supposed to communicate, transparency, opacity doesn't help anybody. Employees can be reasonable if they know. So that is just what I am suggesting, that when we can, let's make the adjustment. Either you adjust financially, you adjust time, but there's something to adjust, sir. There will never be a situation where as an organization, you can do nothing. Because by doing nothing, you probably make the situation worse. Because sadly, some other organizations may be able to do a lot. And because you are not communicating, you understand what I mean? So it's not a must, please. But try what you can when you can. Thank you, my moderator.
Thank you so much, Dr. Adeosun. All right, as we begin to wrap up, Mr. Oladejo, in 2 minutes, right? So we have a question from Sandra. So she asks, with the tax reforms, is it correct that companies can only do business with vendors or clients that have company accounts or tax identification numbers, especially for paying consultants who don't have company accounts but use individual accounts of the principal consultant?
Okay, thanks for asking that question, Sandra. The provision of the Nigeria Tax Administration Act is very clear because that's the law that covers all of the administrative matters. The issue of not doing business with anyone that doesn't have a corporate account is false. There's nothing in the law that says you should not do business as a company with anyone that doesn't have a corporate account. There's nothing in the provision of the tax laws, alluding to that by any means. However, there's a provision that speaks to your engagement with vendors, that if a company engages a vendor that is not tax registered in the capacity of an individual or as a corporate that is not registered for taxes, recall that there's an earlier provision that mandates every person in the eyes of the law, may be entity or individual, to be registered for tax purposes. I think that's section 4. Then there's another section that then says if you are not registered and you do business with an unregistered entity, you can be penalized as high as 5 million naira, as an entity for that particular transaction. And the way the law is couched is not that when you do business with everybody for that year, and then those people are not registered for tax purposes, then the penalty is just 5 million. The penalty, the law seems to suggest that it is per transaction, So if you have 10 clients, 10 vendors, and you have done 10 transactions with them for the year, and those 10 vendors are not registered for tax purposes, if you do the math, you already know the tax liability that you are sitting on, in terms of penalty, especially where they are corporate organizations. So that's what the law says. I hope that helps.
Thank you so much, Mr. Adejo. Dr. Adeosun, we have one final question here from Queen, who says, you had mentioned earlier when it comes to people having side hustles, right? So in a situation where you have employees who more or less take advantage of this and they end up using company resources and company time to attend to these side hustles, right? How do you handle that as an employer or HR?
Okay, thank you so much. Very good question. First and foremost, there is nothing, absolutely nothing that cannot be abused. You need to note that. There is absolutely nothing that cannot be abused. What do you do to guard against abuse? You know it. 2, 3, 4 things. Processes. Okay, policies, guidelines. So the first thing, one of the things to do is, if you have a side hustle, document it, register it, make it official. I am a DJ. I'm a barber. That's the first step. Now, you have your leave, you have your time off. Don't now call in sick, and then we'll now see you next day on Instagram. You are DJing at another company's annual events. That's integrity. That's dismissal. But if you're entitled, for example, to your leave, you can take your leave, 1 day off, 2 days off, go to your events. You can even do full disclosure. Oh, I have an event at a hotel tomorrow. I'm the MC for AEHRP. Can I use tomorrow off, one of my leave days? That's okay. But you now have a problem Monday, Tuesday, Wednesday, Friday, back to back, week in, week out. That is where the problem is. So you put guidelines in place so that abuse does not come into the place. But if you say because of a few bad people who will abuse it, you now stop everybody from having the opportunity. You will lose. You will lose because, one, you may not always be able to pay people what they deserve. The little side hustle they are now using to augment and supplement, you are also now blocking it. When they leave you, for multinational or another organization that is more flexible, please don't blame them. They have a right to survive and thrive. Thank you.
Thank you so much, Dr. Adeosun. Now, to wrap up, so if HR leaders are to leave this session to review just one aspect of their compensation strategy as early as Monday, right? What should it be to ensure that pay feels fair, sustainable, and aligned with today's economic reality? Dr. Adeosun, in 2 minutes.
I will say, check your current compensation and benefits. What are the things that the organization is rigid on? What do I mean? You insist that something must be done at the particular time of the year. Can you make it flexible? Where can you give your employees choices? The third and final thing, if any organization does not have a total reward statement, you must have it now. This is the time to be very explicit in your total reward framework. Let people know what are the benefits and put everything on the table. My brother and professional colleague, Mr. Oladejo Adeyemi, mentioned it. Also, let employees be aware of total cost to the company. Total. Because of the employee, you are paying ITF, you are paying NSITF. God forbid, if you sack that employee today, you will stop paying those particular amount to the government. Why do you need to do that? So that employees will have a slightly better appreciation. Most standard organizations, part of their recruitment process is what we call an offer chart. In the offer chart, they discuss all the elements of the offer, including tax, including pension, everything. In addition to offer charts, because when you promote people, still have offer charts with them, it can be 15 minutes conversation. Don't expect, I can say this for free, 80% of the people don't read offer letters, promotion letters. They just go to the take 20 minutes, 15 minutes, explain that now that we have promoted you, now that we have reviewed your salary, this is the increments in the cost to the company. That way, you will get extra mileage and appreciation. Last, you can give employee choices. Please, avail them. Thank you so much for this opportunity. Great meeting you, Mr. Oladejo Adeyemi, and of course, Prince Obiaku Ige. Thank you, sir.
Thank you so much, Dr. Adeosun. Mr. Oladejo, closing remarks.
Okay, once again, thank you, the AEHRP team. It's a pleasure to meet you as well, Dr. Oluyemi, and thank you for joining every participant. I think what I would say, this issue of tax is rather personal now. Do not treat your tax affairs the way you have been treating them. Even as HR professionals, everybody needs more money. So don't just reel out the pay slip and don't just, most people, they don't use their pay slip until they're applying for something that they said they should go and bring 6-month pay slip, and then they start compiling them. This time around, I challenge you, to take your January pay slip. It's still the beginning of the year. Take your February pay slip and plan around it. Your tax planning options now are individualized for the most part. Bring it up with your HR, bring it up with experts, ask questions, look at what are the options available to you, discuss with your spouses. There are no spousal or group taxation in Nigeria, but there are provisions that can allow you, for instance, to pay life assurance policy for your spouse, and then you still get deduction for it. Do not continue to pour new wine into old wineskin. Yesterday ended last night. This is the new taxing regime, and it will touch everybody. So that will be my final and my parting words with you. And thank you very much for the invitation. And I wish the association all the best. Thank you.
Thank you so much, Mr. Oladejo. Thank you so much, Dr. Adeosun, for such practical and insightful and very, very engaging contributions over the last an hour and a half, right? I would like to invite the first Vice President of the AHRP to give vote of thanks, Mr. Modrotoluwa Ajayi.
All right. Can you hear me, please?
Yes, we can. Please go ahead.
Awesome. Good evening, ladies and gentlemen. I want to especially appreciate Dr. Oluyemi Adeosun and Mr. Oladejo Adeyemi for sharing their expertise, their experience, and their exposure with this topic. Since a bit about past 6 West African time that we started, it's been full of knowledge, it's been full of insights. And I want to extend our sincere gratitude to you, our dear facilitators and speakers, for such a wonderful time, sharing your talents, sharing your treasure, and sharing your time with us on behalf of the entire BOT and the Global Advisory Council. We want to say thank you. And we do hope that next time when we call on you, that you will oblige us and also do share with us. So thank you so much, Doctor. Thank you, Mr. Oladejo. And I want to also appreciate everyone that has stayed on the call. I believe that what our expert had shared with us, we will go along with it and go back to the drawing board and begin to make the proper change. Thank you. AHRP Learning had started, and I'm glad that this session made a lot of sense and contributed to our understanding. Thank you. Prince, over to you again. Thank you.
Thank you so much. Thank you so much, Mr. Modrotoluwa Ajayi. Once again, thank you, Dr. Adeosun. Thank you, Mr. Oladejo, for your insights. And before we close, just a reminder of our flagship events coming up this year amidst our other learning programs for the year. Of course, in 2 weeks, on the 21st, we have another learning session coming up. Please look out for that session. And of course, as usual, it promises to be very, very engaging. Of course, we have KSS 8.0 in May 2025. It's going to be a physical learning session, and expect to get details in the coming days and weeks. And of course, we have AHRP, the 9th annual conference coming up between November 19th to 21st. And of course, we have the payment portal is open, so please visit ahrp.org/conference to register. There are 2 ticket accesses. We have the gold access and the diamond tickets. The gold access gives you access to only the learning sessions on the 19th and the 20th of November, but the diamond access gives you access to the learning sessions and, of course, the gala nights happening in Victoria Island. So please visit the website to make your payments and secure your tickets. And on behalf of the AHRP, I want to thank each and every one of you for your time, for your engagement, and your commitment to continuous learning. We look forward to seeing you at our future sessions this year. Stay safe, keep learning, and remember, the AHRP, continuous learning is our DNA. Thank you and have a good night.